a little bit about accounting here, particularly with respect to anybody wanting to claim indirect costs. The real ease in the grant management area is having a well-structured chart of accounts. And sometimes we as transit, part of a multi-purpose agency, we get stuck with what is existing in the accounting system. Wasn't built to serve transit needs. I kind of touched on that issue yesterday. It was built to do some other function, and transit just gets added to the system. And no one really pays any attention to whether it works well for transit management. And we just live with it because we're afraid to go down the hall and challenge the CFO to say, hey, the reports you're generating do not serve me well. GDOT needs this information. This report doesn't give it to me. And I have to go into the general ledger or keep my own subsidiary Excel worksheets in order to generate the information necessary to report to GDOT. Anytime I see a transit manager maintaining separate Excel worksheets in order to do GDOT reporting, I know we have trouble. I know there are going to be errors. As good as Excel is, people make mistakes. And even when you have the template all set up to generate the data that GDOT needs, multiple people may have access to that template worksheet. And just a simple fat thumb on a delete key may wipe out a cell that is integral to the calculations that go to GDOT. I cannot tell you how many times, even in state dot provided worksheets, I've seen go out with lack of controls or cell protection, and people have wiped out a cell, changed a value, changed a formula. That means they've submitted garbage to the state for years and years and years. So I'm always leery that when you have to do extra work in Excel on the accuracy of either financial or service data submitted to the state, something we typically look at in a compliance review. One of the things that I always like to impart is that the chart of accounts is not some biblical document that comes down with Moses from the mountain and it's set in stone and we can never change it. The chart of accounts is there to serve management's needs. And if it doesn't serve your needs, you need to go down the hall, knock on the door of the CFO, and tell them we need to change this. I need the accounting system to do this. Most accounting software these days are cloud-based database applications that are very customizable. And so almost any need that we can generate in transit can be handled by most software. QuickBooks is a little different, and I know a lot of nonprofits rely on QuickBooks because of its ease of use, quick learning curve, etc. There are a little bit more limitations in QuickBooks than you have excuse me, in other full-fledged accounting packages like Sage or some of the other packages that are out there. They're harder to learn, granted, more expensive. But the key to remember is, what is the financial data that I need from the accounting system to do my job? And that's what ought to be generated out of that accounting system, or you should make changes. At a minimum, and I think I'll hit this, I'm getting ahead of myself. Just remember, the chart of accounts works for you. You don't work for the chart of accounts. So, at least from the super circular's perspective, there are some requirements imposed on you in the accounting system. Whether this is an FTA grant or any other grant that you get, you need to identify in your accounting records every and each federal grant award received and expended. Accurate and current complete disclosure of the financial results of each federal award, meaning we've got to have unique identifiers with the FY18 5311 grant that are separate and apart from the FY19 5311 grant. We sometimes don't see that. Everything's thrown into the transit account. We don't keep track of the performance from an accounting standpoint if we get both 5310 and 5311. Super Circular, and actually past OMB guidance, has always required these elements. This has not changed. And the type of data that we need to have is the total amount of the federal award, what is our authorized level of expenditure, what do we have in terms of obligations, i.e. outstanding purchase orders, unobligated balances, and we have to keep up with assets and expenditures. We need to be able to do comparative assessments, variance statements, where we are within the course of the period of performance of the grant with respect to expenditures versus budget. Within transit, we mentioned this yesterday, there is an accounting device that I think is useful to use as a comparative tool to what we have when we, on day one, when we walked into our jobs, and we were shown what the transit financial reports look like. And one of the things that I would do on day one of my employment is to take a look at the breakdown of accounts that are used by the USOA and make sure that I had some type of crosswalk so that I could take, let's use one as an example. Where's my marker? Is it there in the top? It's right here. So I'm thinking the old structure, 50101, and it's now 5011. This is operator salaries and wages. This is the USOA, old and new. This is my account. I would want to make sure that if it's an account, specific object of expenditure in the USOA, I would want to make sure that I have a dedicated standalone account, whatever the numbers are, it doesn't matter, that would match up in definition with a object of expenditure in my chart of accounts. If I'm in a rural area that may be on the verge of becoming an urbanized area, this becomes even more important because in the future, I'm going to become an NTD reporter, a direct reporter, and I'm going to have to fill out my own NTD forms, and FTA will require me as a full reporter to use their chart of accounts. FTA doesn't dictate that you use the USA as your accounting tool, but you must use it as the reporting tool. As a rural provider, FTA only requires the bottom line, total operating expenses. They don't require rural systems to break down expenses. So if you're in, again, an area that may become an urbanized area as a result of the 2020 census, this is probably something I would begin preparing for. So this is good advice. But because this is very useful, this account developed in the mid-1980s was transit specific, and it was designed to provide management with data useful to for transit evaluation. Even if you're not going to become an urbanized area, I would look to see if other types of expenses. So for example, most transit maintenance managers want to know what I spend on tires. In your chart of accounts, you may have vehicle repair as the object code, and whether it's an oil change, a light bulb replacement, a new tire, it all goes into one bucket. And if I'm the maintenance supervisor and I want to know how much I spent on tires, I've got to go into the general ledger and yank out individual entries and total that up. In the USOA chart of accounts, there is a discrete line item for tires and tubes. I would want to have a discrete line item for tires and tubes in my system as well, so that I'm not forced to have to go into the general ledger and segregate out individual expenses to figure out what our tire expense was in FY19. So a good, we all wear a lot of hats and work 10 hours a day now, and I'm suggesting you work 12 hours a day with this exercise, but at some point when you've got some time on your hands, I'd go in and do a comparative analysis of my own chart of accounts versus the USOA. And you all know where you can find that nowadays. The new infamous GDOT reimbursement form is built on the current USOA chart of accounts. That's what that form is structured on. I heard a lot last night about that form. So, and how popular and how much you all are enjoying using it. It was created by RLS. So,
thank you. I'm glad they don't have any tomatoes.
We're just trying to keep everyone out of the stripes, right?
I'm going to see Julie tomorrow morning, so yeah. So there's a lot of benefit to doing that comparative analysis. And for lack of a better term, we typically develop what I call a crosswalk. It means I line up the numbers from the USOA to the comparable accounts in my native system, so that if I have to go back and use the GDOT form, which is now built on this structure, I know exactly that my account 5201 drops right into the bucket of their 5031. And I have that in writing, and I've got it taped above my desk. So if I get run over by a bus this afternoon, whoever has to perform the billing function next month, because I'm in traction for my injuries, they can sit down and keep the cash flow coming into my organization. This tends to be the expertise of one person on any given transit agency staff, and we always have to be concerned with business continuity. What happens if you get run, and I use the example in my training class of getting run over by a bus. It's almost happened to me once, and I was gone for 6 months, and nobody at RLS could do some of this stuff, and they had to figure out how to handle it. And Robbie got tired of doing this presentation at CTA. So this is a good exercise for us. Where can I find the USOA? It is in part in the Excel spreadsheets, but if you go to the FTA website, www.fta.gov, I believe is FTA, and just type in the search bar on the FTA homepage, NTD. It will take you off the FTA site, because NTD maintains their own website. And you can look over on the left, it will provide the data and the manuals. And you're going to want to look up the USOA manual. And that manual will contain all the definitions. So if you want to see if USOA 5031 matches exactly with what your CPA says is in your account 4215, you can compare definitions. We've talked about the structural changes that go from this 3-digit, 2-digit nomenclature, just a simple 4-digit nomenclature. That's causing confusion for old school people like myself. Hang on a second. In the same topic, I did a little switch up for you guys. So I'm off my script a little bit. I also wanted to add in some other elements that are sort of associated with structural accounting issues. We touched on the topic of internal controls yesterday. And as it relates to super circular training, in my mind, there has been sort of a shift in assignment of responsibilities. So rather than wait once a year for the auditor to come in and tell us where we have weaknesses in our internal controls, super circular more clearly assigns that responsibility to us as the non-federal entity managing federal grant funds. And our responsibilities are to establish and maintain effective internal control over the federal award that provides reasonable assurance. In other words, we're not holding you to a 100% performance standard, but provide reasonable assurance that you're managing the federal award in compliance with statute regulations and terms of the award, i.e., no one can steal money from us. Essentially is what that says. Internal controls are nothing more than policies and procedures. It's not some accounting black box operation. They're designed to provide efficient, effective operations, reliability that the data that we're generating and reporting to GDOT on either our service reports or our financial reports are accurate, and that we're generally in compliance with rules and regulations. We've got to control property and assets. We have to know where they are. We've got to safeguard those assets, those fair revenues. Make sure that the woman in Tennessee is not stealing $12,000 from the fare box, or that the transit manager in Northern Virginia isn't doubling the cost of vehicle maintenance to pocket some of those revenues. And that generally means we develop a policy to ensure that we exercise proper oversight over a particular function that deals with grant monies. And that usually means ensuring that we do not entrust too much authority to a single person in the execution of those duties. So we generally, with respect, and let's use fares again as the example, we do not want to delegate to a single person in our organization responsibility for counting fares, making the entry into the general ledger, and then depositing that money into the bank. No other set of eyes on that function. I could steal you blind until the cows come home and you'll never catch me. You've got to have a second set of eyes looking at my work, which generally means we have two people at all times to verify the initial count, a second individual who actually makes the accounting entry, and a third person who does the deposit slip and actually does the deposit. So it's the segregation of duties that is critical to internal control recognition, a good set of internal controls. And that can be challenging. There are transit systems where literally there may be only one person in the office. How in the world can I get sufficient segregation of duties when I've only got me? I got to do it all. That's not unusual for a small transit system. We basically have to rely and develop job descriptions for other personnel in the organization to at least assist us on a part-time basis to carrying out some of these grant cash-related functions. We may need to have the agency receptionist come in and help us do the count. We may need to have somebody from the finance department come down and take our counts, take it down to their office to do the GL entry, not me. So we have to design policies and procedures with assigned job duties to people within the organization that may extend beyond the transit department in order to identify or to articulate how we do things. And that's articulated in policy, have our board approve those policies, and then we have to monitor to make sure that those policies are working. How do we make sure that policies are working? One of the ways we do it with respect to fare collection is that we try to rotate drivers among different assignments and runs in the organization. Instead of letting Bob always do the senior center run 260 business days a year, rotate Bob with Mary and look at the fare collection levels when Bob does the run from Mary does the run. And if they're statistically lower when Bob's doing the run, you need to dig a little deeper because Bob could be pilfering funds from the fare box. That's management's number one way of monitoring fare collections over time and detecting potential fraud. Unless you have a whistleblower, that's management's only tool to do that, is to compare fare collections of the same run over multiple periods of time operated by different drivers. And that would be a best practice